Hello, welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this Tuesday afternoon. I hope you all had a great start into the new week. As always, before we jump into the markets, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using, so the charting software, the broker, the strategy I'm following, and so on, are linked in the video description down below. And the one thing I recommend, if you haven't done so, is to go and check out the Elliott Wave Principle that you can read online for free when you use the link in the description down below. That said, today we have today we have a slight negative start into the day, so not really counting as break even that, but it's also not too bad. Let's hide the message. Hi Rai, great to have you here. I also made a few changes yesterday still to our portfolio. So in case you remember, we had I'll have to look up the date, but we had I think November 22nd calls that would expire this Friday. And I actually rolled them out to the December 13 calls based on, so in GameStop against our 500 shares, because if we look at GameStop, we can see what I think I shared it already yesterday, that basically I believe that we're currently seeing a retracement and that the retracement will take us down to 25 or 23. And basically, so our calls are now, what did we say, December 13. And I got, let's see if we see it in the trade history, GameStop. No, those were the shares there. So we got net, a couple $100. So extra, which I used to buy a few more shares. So we see that I used $600 to buy 25 more shares here to increase our position to 565 shares. Again, against 500 of those, we have those covered calls. And the reason for this is because, if I might not be mistaken, we might actually finish this retracement roughly here, so which would be December 12th, which means that if we were to sell weekly calls like we did before, then we would have gotten less premium here and less premium here and so on. So overall, it should in the end be a higher return this way. The other benefit in quotes is because I got a couple $100 extra. If I'm wrong and the retracement does not go that far, then we would actually have the point that I hold not just like we had before, 40 shares extra, but we actually have 25 shares more that benefit us in case I'm wrong. So if we already rally up sooner, then we already have more shares that benefit from that extra. From that extra upward move. Additionally, one also has to consider that even if I'm calling the correction here wrong, and we get another push up, maybe even above 30, then it's not sad that my shares will already get called away, but then the retracement could come afterwards. And so I actually expect that by December 13th, so when our options here expire, that we actually will be below 30. So even if we were to get the push first up and retrace, but again, I think it's more likely that we're currently seeing this retracement play out. It might not take us all the way to 23. What did we have here? 23. Let's move that a little bit to 23.17. But it might only reach 25.11. So like somehow ABC, for example. But I believe that from the look of this, that we're actually in for down, up, and then further down till here-ish, before we then continue our journey, which means theoretically, while we will not have to roll our calls every week now, theoretically it should pay off better like this. Now the option or the other option now would be to basically close out those calls early. You can see even from yesterday when I made that move after the stream to now, they already basically would be $200 cheaper, $300 cheaper. Market just opened, which means theoretically, I mean, you can see the average price is $300 per option. So it's the whole option, or all 5 options are worth $1,500, or were worth $1,500, and now they are worth a little bit below $1,200. So theoretically, I could already close out the trade, although it would put my cash balance temporarily at a negative 1,200 since I used the money to buy shares. And yeah, so I think if we wait a little bit more, especially if I'm right and we get to see a retracement further down, then we either wait for the option to expire worthless. And again, I assume it will be somewhere here, December 12th. And then after that, we probably will wait for a little bit of upward movement for the premium to get higher again before we write new options, which we then use again to buy more shares. And with a little bit of luck, so that's the one thing. I mean, yeah, with a little bit of luck or good timing, we might be able to then afford another, what do we still need, 35 shares, so that moving forward, instead of 5 options per week, we can actually write 6 options per week, which increases how much we earn in premium every week, which speeds up how fast we accumulate more shares or have money for other investments. Outside of that, I think yesterday, yeah, well, actually, let's finish up GameStop real quick. So it's unchanged from yesterday. Our predicted value is still that we are going up to 23.16, not 32.16 or 33.81. But short term, as said, I expect that we might go down till here. Now, I also shared this, my first prediction on StockTwits. Yeah, so here, short term prediction that we go down. Long term prediction still mentioned that. Yeah, that we actually, so that I'm bullish, but that I think short term we might go down first. I also have to say now, being on StockTwits for a little bit, so being on StockTwits for a little bit, I forgot just how hostile certain social media sites are. Yeah, so as you can see here, yeah, like I usually, don't feed the trolls, so I usually just reply with a clown emoji. So yeah, and was thinking 25.17. That would be actually the first one. Yeah, so which basically is based on this retracement, I would assume. So if he assumes 25.17, it's probably based on this. No, that would be 25.22. Yeah, so I think that would be the minimum. So I said so, but yeah. Let's see how StockTwits will fit in the future, and yeah, if it's beneficial to share the predictions there and maybe also announce the streams there or so, or not. And yeah, anyway, so for GameStop, things are unchanged again. So long term, I expect that we will go up here and reach the area here between 32.16 and 33.81. Short term, I believe that we might get to see the 23.17, so that this plays out as 1, 2, 3, 4, 5, A, B, C, and then we get another 5-wave push down. And again, I expect this timing is a little bit hard, but I expect this to be done around December 12, December 13. And yeah, either way, it doesn't change. I mean, one could then argue I shouldn't have bought the shares yesterday, but wait. But then the point is, if I'm wrong and we rally up sooner or we don't retrace that far, then I just have a cash balance that doesn't help me, instead of increasing the position in the stock that we're actually wheeling consistently. And yeah, move on to NEO. I think in NEO, I also, as we can see, yesterday bought a few more shares. So I also used some premium. Not sure. I think that also happened after the stream. Simply on the assumption that, again, we hit our minimum target. We were close to the 78.6 retracement. Again, I consider it, as I mentioned yesterday in the stream, our prediction for NEO is actually 468 to 432. So the 68 we obviously already hit, and the 32 we haven't hit yet. I believe it's possible that we might still get a push down further. Then, as you can see, the few shares that I bought would be a little bit at a loss temporarily, but I don't consider that much of an issue, especially since our total exposure right now in NEO is 30 shares. It would be nice to also increase this position to 100 shares. So although the option premiums there are not that, let's check what's here. January would be 59 days away. Yeah. So we can see that the option premium here to sell calls is not that amazing, although it still would equal roughly 10%. So right now the price is around slightly below $5. So buying now and selling then the $5 call, which would also lock in a small profit, would bring around $50 in premium. So for the January option, which is 10% in 60 days. Although only if we then indeed are going up. Yeah, so it's like, yeah, I mean, still it would be nice to increase the position here to 100 shares, and yeah, same would be nice for immersion actually, but there it would be, yeah, it also would only require $500 investment. So we might use the upcoming yeah, like options. So unless we are wrong and our shares get called away and whatnot, but then we can write cash secured puts again to actually increase our positions a little further and get the full 100 shares in NEO and the full 100 shares in immersion as well. But so for NEO, things are unchanged. So while I increased my position already a little bit, so we initially entered somewhere here and now we entered here again a little bit. I expected we might get a little bit more of a retracement for probably will slightly break the 432 here, and then we should see the next move up. It's possible that the retracement is already finished, and therefore, if that's the case, we already have a small position, and if we now go up from here, we can, as said, eventually then up here take it a decent profit as a percentage. Yeah, and if I'm wrong, our risk, as we can see, we would get out if we break the 368. And there we have around $30, $35 risk. So it's really not that bad. Yeah, that covers NEO, that covers GameStop. Barnes & Noble Education Inc. would be the next one on our list as usual, where, yeah, we're still in a waiting position. So we actually assume we were quite right with calling the bottom here, although initially I called it too early, considering or thinking that this is the free wave corrective move, when it looks more like this being the free wave corrective move, retracing 61.8% into the area of wave 4 of the previous impulse wave of a lower degree and whatnot. And yeah, now we'll have to see if we stay here above the 880 mark to confirm our assumption that this is 1-2 and we are currently playing out wave 3. We already have our take profit set at $17.10. Yeah, like so far we would be still fine with the development, but we'll have to wait and see. The other option would be that this is wave A, this is wave B, and we're still getting a wave C down, which would then bring us profit targets to, so for the correction at around 795 for this then potential wave C move. And then from here, we would start to go up, which also for our position wouldn't be too bad. As we see, we would then have a pending $80 loss or so roughly before we start to move up, and would potentially, depending on our current cash position, also be able to increase our position before that happens. Yeah. Now, moving on, Grab, yeah, Grab is still moving. We're basically waiting. We need a break of 535 to have our, in quotes, not guarantee, but additional confirmation that this will indeed be bottom, wave 1, potentially wave 2, either here or here, and then wave 3 upwards, which would give us the profit targets here at 942 and 1088. Here we only hold a call option that expires in January 26. If we're right, payout's going to be nice. If we're wrong, we only lose $50. So the risk reward ratio here is actually quite excellent. We got the call option somewhere here, so already relatively early. It should also be, yeah, I mean, it's like a small one. We can see it's more than 100% in profit, but again, in absolute amounts, it's not that impressive. But yeah, percentages are what matters when we are trading, not absolute amounts, because everyone's going to have a different portfolio size. So the return as percentage is definitely more important than the absolute amount in that case. Moving on, where do we move on? So Grab unchanged, our prediction stays 942 to 1088 long term. And we move on to immersion. We already covered that we are in a waiting position to see if indeed this is the end of the corrective pattern, free wave ABC move. Costs, we're in a waiting position shown for a while now to see if we either break the bottom that we had here or the high that we had here to either confirm correction done, we're going up, or correction not done, and we're going a little bit further down. Our exposure there is a little bit bigger because we have pretty much exactly $1,000 in costs. So we'll see how that plays out, but it's also not something that makes or breaks the portfolio, if I'm right or wrong. And then Novavax, our small favorite here. So yeah, called it too early here, assuming this is ABC, free wave corrective move, just to be then proven wrong here. As you know, I hold some call options that are expiring here, and they probably will expire worthless. So this will potentially be a 2% loss for the portfolio, unless this marks the bottom of the corrective pattern and we get a strong start into the next wave here. But even then, it would be a very, very close call to get that option still into profit. We'll see how the market develops. Maybe I'm completely wrong and we go down further, but we are right now in the area where we have so many overlapping target areas that kind of like would give us additional reason to believe that this marks the bottom, and from here we're going up. Yeah, let's check in on Ethereum when we are working our way down. So Visually, I actually think so. While there is the option that this is A, B, C, but if we look at this pattern here right now, I actually believe that we might be looking at this. Now, I have pending orders here, here, and here, and I think we might at least get to see the 50% retracement unless I'm mistaken. A crucial aspect for this would be to at least start breaking the low here at 3050. Once we break that, we have, while not a guarantee, but an additional confirmation that would support the idea that this is wave A, wave B, and then we get our wave C down, which would have the minimum target at the 38.2 retracement and the 100% target roughly at the 50% retracement, with the option that we still might see the 61.8 retracement. But from looking at this, I would consider actually the 50% retracement the target area. If I'm wrong, we obviously would go up from here. So right now, stop loss would still need to be, so if somebody were short, stop loss would need to be at the high that we had at 3,446. But yeah, as said, I got out of my Ethereum positions here somewhere and basically plan to re-enter here. If I'm wrong, it also means I miss out on an upward move and basically just took some profits too early, but nobody ever got broke or has gone broke by taking profit. So Bitcoin, on the other hand, let's take a look there. Yeah, while we have the retracement here in place, and I thought it would also start here, visually it looks like we have a free wave retracement here and still one more move up to come, or at least one more move, yeah. We didn't bother to label this further, so there are no target areas for that or so, or predictions, so we'll just have to wait and see. We'll keep an eye on it. I mean, I'm just holding the fractions of Bitcoins that I have, and without any big changes. Amazon probably not moving much since we're looking at a weekly chart here, yeah. So visually we would assume that this is 1, 2, 3, 4, and wave 5 still unfinished, and the wave 5 target would be up here. So our prediction here is unchanged. And moving on, Nvidia, where are you, Nvidia? There, no, huh? Where do we hide Nvidia? Down here, yeah. Nvidia, we don't have a pattern. Okay, we're not going to label it today. I promise we will in the near future get to label it again. So yeah, it was a kind of like a mistake to delete all my labelings last week, or last week, yeah, on Monday. SMCI, yeah. Oh, there we actually get a decent bounce. Now, we didn't reach our minimum target here for this wave, yeah. So actually, although we reached our profit target at 1838. Visually, this would now be, but we didn't reach this target area, so it's not perfect, yeah. But visually, this would be wave 1, wave 2, wave 3. Now we get wave 4, and then we get wave 5. So I'm a little bit unhappy that we didn't reach the minimum target for 1, 2, 3, 4, 5 here, yeah. Considering if there are other options that it could be 1, 2, 3, 4, 5, would then be wave 1, wave 2, then that would only be part of wave 3. I think long term it doesn't change anything, yeah. So again, we should still get one wave up, which might already be this whole move, and then one wave down, which would, however, be 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. So if that's 5 waves, then that would be 1, 2, 3, and now we get wave 4, and then we get wave 5 further down, yeah. And that would then only be the beginning of the correction. So the A wave, then we get a little bit of a recovery, and from there we then get a further drop down. So we'll have to wait and see how this plays out. But I'm still bearish here. So our profit targets are unchanged. The first one we already hit, as said, so the 1838. And if my cheat sheet is correct, we made that prediction somewhere here in the episode on the 1st of November at 29. So not the worst prediction, basically an almost 50% drop that came true in that case within a couple of days. And again, our long-term prediction here is however 568 right now, even though we might recover quite a bit, yeah, before we get that to see that move. Yeah, so that's there. DJT, what do we have there? We actually bullish here long term, even though it's completely overvalued. There should have been a big push upwards because they announced that they are going to, or in discussions to buy some small crypto exchange, and Donald Trump is obviously using his conflict of interest to talk to the CEO of Coinbase in terms of what regulations there can be made to be pro-crypto, which means to help his own net worth. Yeah, so never do something for others, just take care of your own net worth like that douchebag. But yeah, do we get a chart? So even though it says it's 8% down, our prediction is based on when it was at 29.90, so pretty much where we are right now, that it will go up to 36.44. If we don't get a chart, that would obviously be a little bit of a pity. And yeah, so if we don't get a chart, then that's it. So, and what else do we have? We had SMCI, Nvidia, Novavax, Intel. What's Intel doing? Intel, we actually have no prediction on the chart because we are not sure about this whole move. We got it right here, like to point it out there. And we clearly have some kind of wave 3 and now a corrective move again. Question is, what are we correcting now? So visually, this might be 1, 2, 3, 4, 5, A, B. So there should be a wave C coming. So like just very roughly. And if there is a wave C coming, then we would then so wave C, A, B, C, and then we would go down to probably the 61.8 retracement would be my guess right now. But this candle here, that was when the earnings were announced, or quarterly results, screws the pattern a little bit or makes it hard to label because we basically hit our bottom target and then our top target in one single move here. And yeah, so we're still going to stay out of this and not going to make specific predictions, but from the looks of it, there's going to be another push further down. Would say 22.77, which is around 10% drop here to finish this corrective pattern. And from there, we then potentially would see the next impulsive move up. We're going to have to wait and see, as said, because again, with this one candle performing so much of what we expected, but not in such a short time frame, it's a little tricky to label. And yeah, that brings us to SPY. In SPY, we have no prediction right now on the chart because we probably still don't have it labeled. So if we get a chart, we still will have to label it at some point, which again is not going to happen today. And yeah, it's not loading. And moving on, and then Nasdaq, we basically, yeah, like, do we have NDX prediction should be, yeah, 24. So we still have a very bullish prediction here that we are going up here. Would potentially be, this is wave 1, 2, and we're now in the third wave that should take us up here, which means this might be 1, 2, 3, 4, 5. We're correcting now a little bit, potentially down till 19,900. Maybe a little lower, and then we would get potentially the next push up, yeah. And that, ladies and gentlemen, actually sums it up already for today. So I still have to, I mean, there's still a lot of things to try to improve stream-wise. 1 second, I'm gonna try. Can I move the car? Oh, yeah, I can, so that there are, the tickers are visible properly. So yeah, I think for us, the most interesting moves, obviously, as usual, are gonna be GameStop because we have the biggest exposure there. Yeah, it's literally our biggest or most interesting play because that's where we make our option premium every week. It's going to be interesting. So as you see, I added a what is it, ratio timeline? No, not ratio timeline. What's the element called? Time range. Yeah, no, not time range. Time range again is different, but regular time range. Yeah. So Fibonacci time range, and I'm trying to determine if we can see regular price hits here. So we see, for example, if we take wave 1, then maybe it's a pure coincidence, but wave 2 ends at the 261.8 extension level on a time base, yeah, and wave 3 ends at the 686 roughly. So if we are right, yeah, so here's wave 3 end. And now the question would be how we would count wave 4. So maybe it's just completely random if I pick it like this, that it says 423.6 would be here. But that's something I also would like to look into. So again, like while we follow rules and guidelines in most of the aspects, my timely prediction that the retracement should take until here is actually based on me, in quotes, playing around and trying to determine or find patterns on Fibonacci time scales, time ranges. I wonder if, so let's try this. If we get rid of this one, so and we would say, okay, this here is wave 2. And wave 1 would be here. No, wave 2. Oh, okay, they both behave in the same way. That's kind of stupid. What's the point here? So what's the point of having it like this? Yeah. One also has to say, motive wave, by the way, has a lot of those things built in already. So I can just say here, and then we say not degree, but there should be time analysis. So for example, 2 versus 1, and we see that it's hard to read for here. If we zoom in, we might get to see some values on the chart. Then we see that wave 2 is 161.8% of wave 1. So assuming our labeling is correct, that's always the assumption. And if we say, what do we have for wave 3 versus 1? Would be 423.6% apparently. And if we say 3 versus 1 plus 2, so would be 161.8, the closest level, yeah. And so the question would be, what would be the fitting again, assuming our labeling is correct, that's always one of the factors. If we say 4 versus 3, we'd actually have the 100% level here at December 12th, December 13th. If it's finishing sooner, the 61.8 level would be here, yeah. So, but again, all that, so applying Fibonacci time aspects is something that I'm just experimenting with a little bit. So definitely not something to solely base a trade on or so. But it would be interesting to see if we can find connections, so or patterns where I don't know, we can look at Barnes & Noble Educational, for example, where we have a nice 5-wave impulse up here. So let's see if the auto labeling gets it right. Yeah, almost. So likely 1, 2, and then 3, 4. Although 3 could technically be here, and we have a flat retracement. Yeah. So, and if we now say time analysis, 1 versus 2, it says 261.8 is the closest level. So I'm going to zoom in here. So it's off by, I mean, we're looking at a 12-hour chart, it's off by 1 day. So if this is indeed wave 1, then wave 2 is here off by 1 day with the predicted low. Yeah. And if we, let's undo that, and if we look at 3 versus 1 plus 2, it says 200%. And if we look at 3 versus 1, then it doesn't show a percentage value, okay. Although that depends, if we say we are here, okay, then we don't get a percentage value here. Let's see. So again, it could be that 3 is here, and that's a flat corrective pattern. So 3 versus 1, no value. 3 versus 1 plus 2, also no value here, okay. So yeah, might not matter much, but yeah. So, and then for wave 4, time preference, time analysis, 4 versus 3, 78.6. It's also, I mean, when we look at retracements, it's also one of the retracements level that we expect sometimes. You know, it's like, and what else would we have for wave 4? 4 versus 3, 4 versus 2. Okay, that's not helpful. Up, and then we would have probably 5 5 versus 3, 100%. Yeah, 114, so like not that close. 5 versus 1, yeah, no value. 5 versus all, 50%. Huh? Okay, yeah. So yeah, so time analysis, not too easy, or was that not too easy? Probably is once you have a feeling for it. I'm so far still playing around and trying to find the mutual or the some not pattern but some recurring values. So if we regularly would see that a wave 2 in time behaves or hits the 261.8, it would help to try to estimate when certain levels are going to be hit. Anyway, so that's it for today, I would say, because we looked at everything, we analyzed everything, not much changed so far. As for my portfolio, so I said we just switched to the December 13 calls. I also have to admit, even though they are further out, it seems that they appreciate in value faster. That might, however, just be the case because we had a strong upwards move that makes them more expensive. And as soon as we see some slowdown, the price for them might drop relatively quickly. However, it's going to be interesting to watch and see if I'm right here or not. And either way, it won't change much. So the worst case scenario that could happen is that I'm completely wrong with my bullish long-term stance on GameStop, in which case, obviously, the shares that we are holding would lose in value, although we already made some decent profit. I can share that. I can actually hide that, but then it's still, okay, so can hide that. Although you anyway see those numbers anyway, so there we go. So if we look here, we are right now up 62%, 63% since May, when I moved to Interactive Broker, which is not too bad for, what is it, middle of May, June, July, August, September, October, November. So for half a year, 62% in half a year, definitely not too bad. We're already a little higher here at this point. We're at around 68% return. And obviously then we got our shares assigned and GameStop declined and it's going sideways. But we pretty much, from the around 10,500 euro that I had in the middle of May in this portfolio, we basically made it to 14,700, and on top of that, an extra 100 GameStop shares that are transferred away already. So definitely not too bad. In my opinion, I'm quite happy with the return. And to be fair, outside of my trading endeavor with 20 times leverage in the Nasdaq, which caused huge swings in my portfolio before I moved to Interactive Broker, I'm actually quite happy with my performance the last couple of years since 2020. But yeah, anyway, so that's it for today. I will not keep you guys longer. Thanks for stopping by. As always, there's going to be another episode then tomorrow, 5 minutes before market opens. Not sure what will change though tomorrow. We probably will know a little bit more in terms of if GameStop is going to go this way or if maybe we get another push. But I think the most likely scenario is right now that we'll retrace down here, and we'll just have to wait and see how it plays out. If that happens, it would be the best thing for us, in quotes, because, well, it would mean that we could pocket potentially the entire premium by December 13th, and then we can sell new covered calls and get us another, potentially the missing 35 shares that will bring us to 600 shares, which increases the number of options that we can write every week or every whatever number of days. So since right now we have obviously a further away expiration, so the 13th is still, it's still 24 days away. So yeah, but in those 24 days, we actually basically, I had to cover the old options, so buy them back, but it's still, around a 10% return or so for those 24 days, what we made in premium compared to the portfolio size. Anyway, so yeah, thanks for stopping by, right? Thanks for stopping by. I know we don't have any new predictions or so. Everything's unchanged for now. We're waiting for some things to move in the way that we want it to, or that I think it will. And I wish you all actually a pleasant rest of the day. Good luck with your portfolio and your own trades and investments. And then see you all tomorrow for another episode of Daily Market Mastery. Till then, bye-bye.